Max Baecker, president of American Hartford Gold. Thank you so much for joining us today.
Thanks for having me.
So we get a lot going on. Everybody's looking at gold prices going, wow. I mean, new highs almost every week. It's pretty incredible. What's driving this fundamentally? Like, take a step back for a moment and walk us through why we're seeing this kind of upside in gold at this moment in time, Max.
You're seeing multiple drivers right now. Awful lot of money printing going on since 2020. That's starting to really take effect. You're seeing, obviously, a couple wars going on, major wars going on. That's pulling, forcing gold upward. And then central banks buying at the fastest clip in 55 years. So you've got a couple drivers there moving gold upward. And I think we're just in the first inning of this rally. So we're just getting started.
You say the first inning. I mean, I hate to be all doom and gloom, but I think that's part of the story. I think there's a practicality too, and there's always been a practicality to gold for thousands of years. But when you look at sort of the fundamentals, right, in this economy, and you see how much every politician, by the way, on both sides, loves to spend, and you look at that good old debt to GDP ratio, which I like to look at. I think we've got a great chart, and you can see, Max, how much it has grown over the years. And I think you can project that it's going to continue. I mean, if we stay at this pace and there's nothing to suggest that it's going to be anything but that, then I suspect that debt to GDP ratio is going to continue to grow worse, making us increasingly sort of, I don't know, like an emerging market, banana republic kind of economy.
That's what it looks like right now. And, you're not the only one warning about that. You've got, some big players like Jamie Dimon warning about that. You got the chief strategist at Bank of America warning about that, Michael Hartnett. Across the board, people are very, Larry Fink, across the board, people are very concerned about the debt, a $2 trillion deficit. We're printing another $1 trillion every 100 days right now.
Amazing. I mean, it's amazing. And there's no sort of will to stop it, if you would, which is pretty concerning. But I guess it's in part sort of, we're in this new era. There's all this talk of MMT. Why do we have to be responsible? And then you get people like this. I want to show you, this is the former head of the House Budget Committee, a representative from Kentucky. He recently retired, but here he is in the summer of 2021 trying to convince everyone that it's no big deal. You can just print and print and print and print because, quote, we're like the banker in Monopoly. We print the money. Everybody else just plays the game with it. Listen to this.
So then the question comes, if you can't find the resources to do it, what do you do? And this is part of a much longer topic that I'm not going to discuss today. But it's about making some recommendations. One is, we don't need to find ways to take money from people to pay for what we need to do for people. In this country, because we issue our own currency and because we borrow and spend in our own currency, we can pay for whatever we want to pay for. We just tell the Treasury to pay the bills. We write the checks and the bills come in. And you say, well, what about the debt? $28 trillion. Are you piling it on our grandkids? No, we're not. We're not. This is standard, I will say, conservative rhetoric. And even some Democrats parrot it. Oh, we're putting it on our kids' credit card. We've been accumulating debt in this country for 230 years. Now, one person has ever been asked to pay for his or her grandfather's profits. Right? Never happens. The famous thing is, I'm sure, when the national debt reached $1 billion under Abraham Lincoln. I know they were saying it when it reached $1 trillion under Ronald Reagan. I heard all that stuff back then. All right. So $1 trillion under Reagan, it's now $28 trillion. Has anybody been asked to pay part of that debt? No, because we don't have to. But yeah, we have sovereign currency. We are not like businesses. We are not like families. We are not like state governments. We are not like local governments. We don't have to balance a checkbook. We are like the banker in Monopoly. We create the money, we hand out the money, everybody else plays the game with it.
We don't have to balance a checkbook. What do you think about that?
I understand the concept of what he's saying, but there's consequences for money printing. And unfortunately, the people that really pay the price for that money printing are middle class Americans, because inflation rears up like we've seen. We've increased the M2 money supply from 15 trillion to 22 trillion in 4 years, from 2020 to 2024. That's decreased the purchasing power of the dollar anywhere from 25 to 30%. And who feels that? Middle class Americans, lower class Americans, they're feeling that through inflation. So you can print as much money as you want. It's going to result in some really bad inflation that we're feeling right now.
It's weird because it's kind of inverted in a way. I mean, they're trying to help the middle class, right? When they're freeing up the money supply and, helicopters of cash come in, but it has the unintended effect of doing the opposite. It helps the market. You see the market go higher, and it helps people who have money who, really don't get hurt by the 50% increase in the cost of eggs, right? Or the 40% increase in the cost of gas. But everybody else is feeling it. And keep in mind, Max, it's not like wages are going up 30, 40%. It's not like there's a correlation there. So yeah, it's hurting the middle class pretty darn badly. And, now we're seeing a lot of people starting to call it out. And I suspect, as we started this interview, this is so much of what is driving gold, right? Because if you can't trust the US dollar, you can't trust the US government to be responsible with their money printing, then what do?
Yeah, you got to move to, the currency of last resort. Been around for thousands of years, and really, gold is staying the same. It's just costing more dollars to buy 1 ounce of gold now.
I think the producer has a great chart of the money supply versus the price of gold, which I'd like to show to you and to the viewers here, because I think this is really kind of relevant. You look back in years like 2010, 2011, even into 2012, and you see that gold prices were quite high, but the money supply or the monetary base was not as high as gold prices. And now you look at where we are today, and it seems as though those things are coming much more into alignment. And I say that, I guess I point it out just because when people look at gold, and, I understand, like any of these investments, and I'm no one's investment advisor, so I'm not telling people what to do, but I understand, like, it can be a little nerve-wracking. I find this chart, myself anyway, I've showed it before, to be somewhat comforting. What do you make of it?
I completely agree. And this chart here is why nearly every major investment bank out there is calling for gold to be significantly higher by the end of the year and on through next year. It's charts like this. It's supporting the price of gold. And really, from 2008 to 2011, the dollar, DXY pulled back significantly from 90 down to about 70. And it took the dollar going down to about 70 basis points for gold to be at an all-time high of 1,900 at that time. Right now, we've got the dollar at 107 against other currencies. It's sky high. And I'll tell you why that's good for gold. Typically, when you see the dollar this high, gold should be lower. It should be substantially lower from where it is right now. So if we get into any kind of recession or any kind of rate cut environment, that dollar is going to fall down to 95, 90, 80, 70 basis points. And you're going to see the price of gold shoot up to 2,500, 3,000, 3,500, UBS 4,000. But for gold to be as resilient as it is right now with the strength of the dollar versus other currencies, it just bodes well, again, in a rate cut environment or a recessionary environment for gold to be substantially higher from here.
People need to remember gold is priced in dollars. So what you're saying makes total sense. Right now, we're kind of the prettiest girl at the dance in terms of our currency, but it's not that. It's not filled with lookers, as I like to say, because you get the ECB cutting, and so we look like we're more stable in comparison. But there's an expectation, and historically it's been this way, that the Federal Reserve will cut before November because we're going into an election cycle. It's something that Joe Biden even brought up in a recent interview on CNN. He says a lot of things that are kind of off in this one, so you kind of just have to manage through it, and we'll talk about all of it. But I want you to see this.
When you talk about the economy, of course, it is by far the most important issue for voters. It's also true right now, Mr. President, that voters by a wide margin trust Trump more on the economy. They say that in polls. And part of the reason for that may be the numbers. And you're aware of many of these, of course. The cost of buying a home in the United States is double what it was when you look at your monthly costs from before the pandemic. Real income, when you account for inflation, is actually down since you took office. Economic growth last week, far short of expectations. Consumer confidence, maybe no surprise, is near a 2-year low. With less than 6 months to go to Election Day, are you worried that you're running out of time to turn that around?
We've already turned it around. Look at the Michigan survey. For 65% of American people think they're in good shape economically. They think the nation's not in good shape, but they're personally in good shape. The polling data has been wrong all along. You know, how many, you guys do a poll with CNN, how many folks you have to call to get one response? The idea that we're in a situation where things are so bad, the folks that, I mean, we've created more jobs. We're in a situation where people have access to good paying jobs. And the last I saw, the combination of the inflation, the cost of inflation, all those things, that's really worrisome to people with good reason. That's why I'm working very hard to bring the cost of rentals down, to increase the number of homes that are available. But let me say it this way. When I started this administration, people were saying there's going to be a collapse of the economy. We have the strongest economy in the world. Let me say it again, in the world.
Although GDP last week was far short of expectations.
Oh, it wasn't. Look, GDP is still growing. Look at the response of the markets. Overwhelmingly positive. Overwhelmingly positive. And one of the reasons why people feel good about it not being as strong as it was before is they believe that the Fed's going to respond.
They hope they're going to get a rate cut.
Yeah. Well, so, but I mean, no president's had the run we've had in terms of creating jobs and bringing down inflation. It was 9% when I came to office. 9%. But look, people have a right to be concerned. Ordinary people, the idea that you bounce a check and you get a $30 fee for bouncing the check, I changed that. You can't charge more than $8 for that. Or your credit card, you know, your late payment, $35. I mean, there's corporate greed going on out there.
That's a really tough watch.
I won't bore you with that, but I have a whole theory. You know, it's politically expedient for him to say corporate greed, but I've actually looked at these numbers, and these big box retailers, they're actually seeing thinner profit margins. Why? Because they're hit with inflation too. Like, it's tons of inflation. He said he inherited 9% inflation. I don't think that's the case, Max, right?
He inherited 1.4% inflation, and he inherited the strongest economy, you know, in the world. And the CNN gal from CNN kind of hit the nail on the head. Americans are concerned because their dollar's purchasing power has gone down substantially the past 4 years, and their wages haven't gone up, haven't kept pace. And so everyone's feeling it, unless, you know, you're in the top 1% and you have a big stock portfolio. But, you know, if you're middle America, just trying to earn ends meet, it's tough sledding out there.
So, I mean, I think it's important for people to think about as they try and position themselves for retirement, as they try and position themselves for hopefully a day when they're not working as much. You know, it's one thing to save and invest, and that's all important. But, you know, I'm a big believer in diversity, and I think this is kind of a worthwhile, I mean, I'll just say it. I think I do it myself. I invest in gold because it's a diversification tool that I feel that I need in my portfolio, so that I know that all those dollars I'm saving up, right, are one day going to be worth as much as they should be in this inflationary environment. Is that how people should be thinking about it?
Yeah, gold is just a great diversification tool. It's a hedge. It's an insurance policy. And it's certainly with what we're up against right now, with kind of the war on the dollar, with all the printing that we're doing, the debasement, devaluing of the currency, you don't want to be in all dollar denominated assets. So if everything you have is priced in the dollar, you want something that has the inverse relationship to that. And, not a substantial amount, but again, just enough of an amount to be an insurance policy on the rest of your holdings.
Let me just ask you too about silver, right? Because a lot of people and a lot of the viewers on the show are like, "Oh, I can't swing it." I mean, they can buy bits and pieces. It's not like you have to buy a gold coin or a gold bar. But if they're saying, "I want to get in and I want to just get my feet wet in a less sort of, way," is silver that? I mean, I look at the upside in silver and I assume that that's kind of tied to it's what we're seeing with gold.
Yeah, so silver is a great investment right now, and it's up floating around $28. It's up about 30% since October. And gold always is kind of the first. Yeah, gold's always kind of the first to move, and then silver reacts after. I feel like silver is wildly undervalued right now, and it's not even close to its all-time high of $49 an ounce.
Why?
I'm sitting at 28. It's coming. That dollar strength that we talked about, the DXY being so high, once that falls in a recession or a rate cut environment, you're going to see silver take off. And so, yeah, gold, $2,400 an ounce right now, silver, $28 an ounce right now. If you're just looking to dip your toe in the water and take part in some kind of a hedge insurance policy, silver would be a great way to get started for you.
Do you have any, I don't want to put you on the spot because I think it's not really fair to say, what is your price point for gold? But I mean, as we go into the election, as we go into maybe a rate cut from the Federal Reserve, do you have any numbers you're putting forward?
If we get any kind of a rate cut, we'll be around $2,700 an ounce, which will be a pretty nice increase from where we're at right now, floating around 2,400. If we get any kind of a black swan event, like last year we had the bank crisis, if we get a couple more bank failures because of these high interest rates and these regional lenders are having trouble, if we have a couple more bank collapses, or we have any, kind of chaos with elections, or we head into a recession, you can see gold easily around $3,000 an ounce. And I think that's a pretty
Around
conservative
3,000,
prediction.
you think? Okay.
Yeah.
Yeah, there was an analyst actually at the beginning of the year who called for 3,000 with gold this year, and I was like, wow. I mean, where we are now, I'm pretty happy. Again, I invest in gold, so I'm pretty happy. But I see what you're saying. I see exactly what you're saying. And again, when I look at gold versus the money supply, it's neck and neck right now. So they increase that money supply. What are you going to see? The cost of gold go up. So really fascinating to watch from a macro standpoint, and then from an investor standpoint. I'm long-term though, I buy and hold, but will you actually house the gold for people as well?
Oh yeah, absolutely. We offer storage for people that hold gold within their IRA accounts, as well as if you like to send a bank wire or a check, we'll store the gold for you, or we can find a depository near your home.
That's so neat. It's really neat. It's amazing to see all this, but you know what? People need it, and there's a market for it for sure. And there's been a market for it for thousands and thousands of years. We should never forget. Max Baecker, thank you so much.
Thank you, Trish. Appreciate you.